Hey guys, Hambo Investments here. I had a question on one of my videos, and it's a great question, and I wanted to address it in a video today. So hopefully this adds value. So let's get into it. So I had the question: can I please do a video on the plus investment plans versus the standard plans? So this is a question I've been kind of wondering myself, so I wanted to address it. So I reached out to Fundrise. They sent a message, and then I'm just going to show you the different aspects of it. I don't know everything, with the Balance Plus, but hopefully I can give you enough information to where you can research it as well and find out if it's right for you and it fits into your investment strategy. As you can see, I'm currently in the Balanced Investing Plus plan for this quarter. I kind of change it up every quarter. I was in the growth for a long time, and my equity is far outweighing my debt, and I want to build up my debt so I have more dividends as well and have more balanced approach. So I want to get this closer to 50-50 on my overall plan. So let's get into what Fundrise said to me, and then I'll go over the different plans. Hi, Steve. Thank you for reaching out. The Standard and Plus plans share the same objectives: supplemental income, balanced investing, or long-term growth. However, the Plus plans give advanced account level investors access to more sophisticated investment strategies with the potential for higher long-term returns. So that's pretty much what we all know about the Plus plans. We just know that they're kind of adding some different layers of an investing to diversify the account more. So let's go continue on. Currently, the Plus plans allocate a portion of your portfolio to the tax-advantaged E-funds, professionally managed, diversified portfolios of residential real estate assets such as single-family detached homes, townhomes, and condominiums. The general effect on the portfolio is more diversification, a lower dividend, and a higher potential long-term return. Comparison of the return projections for the Standard and Plus versions for each investment plan can be found here, which I'll show you a little bit later. For additional information on our E-funds and their active projects, please see our offerings pages here, which I'll show you a little bit later. So yeah, that just basically tells you they have some separate E-funds, which they have 3, which I'll show you in a little bit. Professionally managed to diversify your portfolio, added more advanced layers and making you more of a partner within the company, which you'll be issued a K1 to that effect, which I'll get into a little bit later. There are no additional fees associated with the Plus plans. However, investors who upgrade to the Plus plan should expect to receive K1s, which basically means, the profits per year, then they divide between the people that are in those E-funds, and they distribute out accordingly during the next tax season, which are typically delivered in mid-March. Advanced account level holders who also have the ability to invest directly into our E-REITs and E-funds and receive 100 days of zero advisory fees for each investor. So this really just goes on, just added to the email that they sent me. But this leads me to my next point with you guys. If you guys are considering Fundrise, I will leave a link down below, and that's exactly what they do. If you guys do sign up, they'll give me 180 days of zero advisory fees, which, my account's, $11,000, and it still only works out to pennies over the long term. So I really don't see much from this, but my whole thing is, if you want to get involved with it, I want to give you enough information to make a decision yourself. So if you decide to do it, please use my link. But either way, I just want you guys to invest the best way you guys can for yourself. So let's see. I hope this information is helpful. I won't read this. What is a K1? I'll give you kind of the definition of it. What is a K1? Because when you get into these funds, it will change your taxes, and you don't get them till mid-March. I had a K1 this last year, and it kind of sucks that you don't get it till mid-March, because then you really don't have much time to finish your taxes once you get the K1s. But what is a K1? Businesses that operate as partnerships are considered to be pass-through entities for tax purposes. That means that all profits and losses flow through to owners. At the end of the year, partnerships, S corporations, and LLCs tax as partnerships calculate their total profit and loss for the year. Then they divide the profits and losses according to each partner's interest and complete a K1 form for each partner. So let's go on to the plus plans and kind of see the differences between the plans. So I'll go over long term now because that's what I was in a majority of the time. So the standard, in the long term, it's more of like it says, a long term investment. So you're looking more in an appreciation. So the dividends are really low, the appreciation is fairly high, and a total of 8 to 13.8% a year, which I've been in it a year, and I don't think I've seen these returns, but it's hard for my account to accurately project because I'm constantly doing small deposits throughout the year. So I have to just figure out my base amount that I can project and do a spreadsheet so I can calculate my annual percentages. And the plus plan, the dividends are a little lower, appreciation is a little lower, so 7.1 to 12.3%. So the plus plan, if you're looking at total numbers, the plus plan is probably not the way to go versus the standard. So let's go into Balance Plus now and show you the differences between that. Standard, this is the one I'm currently in. Standard, 3.9 to 4.3. The Plus, lower. Appreciation, 4.7 to 7.1. Appreciation, they consider, it's all over the place. Lower to higher, 6.9 to 11.8. So you're really all over the map. So it kind of depends on what profits you do have. On down years where you're dividing some of the losses, you're going to probably be a lot less than the standard plan. Let's see here. And we'll just go into the supplemental income. Supplemental income's one that's mainly on dividends only. As you can see here, dividends 4.9 to 5.4. So in the plus plan, your dividends are really being lowered. The appreciation can be a lot higher, up to 8.3% versus 4.8 on a high. So the overall gain in the plus here can be a lot higher, but it can be a little lower. So hopefully that helps with the comparisons too. And here is the extra funds that are considered in the plus plans. These are all the ones in the standard plans, depending on if you're in supplemental, balanced, or growth. And you can invest directly into these, especially if you're an advanced member. So advanced account level, you need at least $10,000 in your account, and then you can opt into the plus, and then you can go into these different e-funds here. So 25 active projects, advanced, Form K1, current dividend because it's ramping up. They haven't really started. The Los Angeles e-fund is the same thing, ramping up. 30 active projects. Current NAV per share 10.44, but current dividend is at 0. They haven't really figured it out. 10,000 over the year they say is worth 10,415. So that's roughly 4.15% on historically. And we'll look at the National e-fund. So ramping up, 26 active projects, mostly all California, 10.25 estimated per share, and they're looking at, so this one's only, roughly, 2.31%. So that's going to cut it here. Hopefully this answered the question. Basically what it comes down to is, are the plus plans worth it overall over the standard plans? Well, It's really too early to tell, so time will tell on that. I'm going to stick with it for this quarter and maybe after, but I'm going to play around with it and see how it goes. I mean, it's only been going for roughly a year, so it's way too early to tell on how these plus plans are going to work, but hopefully that really distinguished a little bit on the differences between the plus plans and the regular plans. So thank you for the question. Hopefully it did provide some value. Please hit that like button and subscribe, and I'll see you next time. Take care. Happy investing. Bye.